Look at your screen right now. Whatever app you check, whatever platform you use, the digital matrix is telling you a very specific story. It says silver is priced at $69.66. That is the paper price. That is the holographic projection. It is the number your portfolio is weighed against, and it is the illusion that dictates the moves of the asleep masses. That is what the paper market says silver is worth today, Monday, March 30th, 2026. We are going to look at what an actual human being is paying to hold real, tangible metal in their hands. A Japanese retail buyer walking into a bullion dealer in Tokyo today is not paying $69. They are paying between $107 and $127 per ounce for physical silver. There is a $37 to $57 gap between the paper control system and physical reality. This gap is not a glitch. It is a revelation. It is the real-time breakdown of a massive financial construct that has become completely divorced from the material world. I need you to internalize what this means. We are watching the conscious manifestation of a bifurcated reality. On one side, you have the decaying architecture of Western debt, a carefully engineered mirage designed to keep you trapped. They broadcast a low frequency of compliance through these artificially suppressed prices. But the map is burning. On the other side, you have the awakened East, quietly and methodically draining the physical vaults. The architects of the old system are terrified because they know their paper contracts cannot be alchemized into tangible atoms. When you look at the Tokyo Commodity Exchange, you are not just seeing numbers on a ledger. You are witnessing the collective consciousness of a nation recognizing the collapse of purchasing power. The Japanese yen has been strategically hollowed out by a central bank trapped in its own web. The Bank of Japan holds the highest government debt ratio on earth, at over 260%. They are paralyzed. If they raise rates to save their currency, their domestic bond market implodes, so they sacrifice the yen. And as that fiat currency bleeds out, 126 million citizens are instinctively seeking safe harbor. They are transmuting dying paper into eternal metal. They are opting out of the program simulation. Every single ounce of silver bought at $127 is a quiet rebellion against the central banking apparatus. It is a stark reminder that true wealth cannot be printed, digitized, or spoken into existence by bureaucrats. The illusion only holds power as long as we consent to it. The consensus trance is breaking. Once you see the strings of the puppet masters, you can never go back to sleep in the dark. To understand this massive arbitrage between the holographic paper market and physical reality, we must dissect the three layers of the Japanese market. We are peeling back the artificial matrix to reveal the stark mechanics of a collapsing system. The architects of this illusion rely on your ignorance, but the numbers tell a story of quiet desperation. Layer 1 is the currency collapse. On the Tokyo Commodity Exchange, silver is priced at 11,910 yen per ounce. The Japanese yen is weakening rapidly, trading at approximately 150 yen to the US dollar. But this is not an isolated economic event. It is a systemic trap. The Bank of Japan is locked in a sovereign cage, carrying a government debt ratio of over 260%. They are mathematically paralyzed. They cannot normalize interest rates without triggering a catastrophic sovereign debt crisis. As the fiat currency erodes, 126 million citizens are instinctively doing what awakened civilizations have done for millennia. They are transmuting dying fiat paper into hard, undeniable physical assets. They are securing their energy outside the collapsing grid. Layer 2 is the mandatory 10% consumption tax. Every physical bullion purchase in Japan is subject to this inescapable levy. There are no exemptions for investment-grade bullion or government-minted coins. It is a flat 10% penalty on every single transaction. On a base equivalent price of $79 to $84, this tax adds another $8 to $10 per ounce. The price floor is suddenly raised to $87 to $94, but here is the esoteric truth of this mechanism. In a rising market, this tax becomes a built-in profit margin for existing holders. When a Japanese investor sells their metal back into the system, they receive that higher price, including the tax the next buyer must pay. They have a structural incentive to hold their physical wealth and permanently shrink the available supply. It is a one-way street out of the fiat illusion. Layer 3 is the physical toll, the dealer premium. Japanese precious metals dealers typically charge 15 to 20% above the exchange rate. This is not arbitrary greed. It is a symptom of shattered global supply chains. With Shanghai physical inventories plummeting 43% in just 3 months, and export licensing regimes restricting outflows from the East, Japanese dealers face massive logistical hurdles to source actual inventory. Add it all together, and the true, undeniable cost of exiting the fiat matrix in Tokyo is up to $127 per ounce. The paper illusion in the West whispers that silver is abundant and cheap. But the physical reality in the East screams of severe scarcity. The veil is lifting. The global paradigm is fracturing right before our eyes, shifting power from those who print paper to those who hold tangible elements. When you internalize these three layers, you realize that the mainstream financial narrative is fundamentally broken. The real world demands real value. By holding physical silver, you are not just preserving wealth, you are anchoring your existence in truth, while the architects of the system drown in their own manufactured sea of infinite digital debt. This is the awakening. Japan is not an isolated anomaly within this grand matrix of financial suppression. It is the bleeding edge of a global awakening, the most extreme example of a structural paradigm shift occurring across the entire planet. If we map these physical prices geographically, peeling back the digital overlay to see the raw, elemental truth, a profound and undeniable picture emerges. New York dictates the illusion at $69. That is the cold, artificial epicenter of the paper control grid. But as we move eastward, the holographic projection begins to fracture. Cross the Atlantic to the United Kingdom, and the reality shifts. A Britannia coin minted by the royal establishment runs $74 to $78, carrying a $5 to $8 premium above the spot price. Move further east into the ancient wealth structures of India, and physical bars trade between $73 and $76, which equates to over 225,000 rupees per kilogram. The physical demand is burning through the paper suppression. Then we reach Shanghai, the true dragon awakening in the east, and the engine of immense physical accumulation. The Shanghai Gold Exchange is currently pricing silver between 17,390 and 17,850 yuan per kilogram. When you convert that into the fiat framework of the West, it is $77 to $79 per ounce. That is an $8 to $10 premium sitting directly above the Western paper price. Recently, we witnessed a profound divergence that the financial architects prayed you would not notice. Shanghai physical silver surged 2%, rocketing up while New York paper futures actually dropped 1.24%. The Eastern physical reality and the Western paper hologram moved in entirely opposite directions on the exact same day. Map these prices geographically. New York at 69, London at 74, India at 73, Shanghai at 77. This is not a random distribution of market inefficiencies. This is a blazing, undeniable heat map of physical scarcity. The price escalates as you move toward the regions with the highest authentic demand and the tightest physical supply chains. The commodity exchange in New York is officially the cheapest place on earth to buy silver right now. The critical question you must ask yourself as you navigate this esoteric reality is why? Why is the digital market telling a fundamentally different story than every single physical marketplace on the face of the earth? Because the further east you travel, the closer you get to the source of the physical drain. The East recognizes the inherent alchemy. They know the fiat system is a dying spell, a reality control system losing its grip. As they relentlessly siphon the physical metal, the global heat map glows brighter, signaling the inevitable end of the paper illusion. The veil is lifting, revealing the truth that physical scarcity will always shatter the fragile structures of synthetic engineering. Watch closely. Why is the paper market telling a fundamentally different story than every physical market on the earth? Because the financial control grid is rapidly losing its anchoring. In the material realm, we are witnessing the systematic severing of the synthetic matrix. The architects of this illusion can print infinite digital contracts, but they cannot print physical atoms. The global supply is fracturing. We are currently entrenched within our 6th consecutive year of a massive structural supply deficit, bleeding exactly 67 million ounces from the system annually. This is not a market cycle, it is a permanent systemic drain. The awakened powers of the East recognize this esoteric truth. China has officially classified silver as a highly strategic export material, implementing strict licensing controls that remain fully in force today. They have purposefully severed one of the major supply arteries feeding the global physical markets. Simultaneously, the historic London vaults have bled approximately 40% of their foundational inventory since the year 2021. The global arbitrage mechanism that kept the paper illusion aligned with reality has completely broken down. Look closely at the belly of the beast. The New York registered vault has plummeted 30% in just 60 days, dropping to a mere 76 million ounces. The paper to physical leverage ratio is blown out to an astonishing 7.5 to 1. It is a fractional reserve illusion on borrowed time. In the East, Shanghai physical inventory has collapsed 43% in 3 months, hitting its absolute lowest level since the year 2015, at 10.24 million ounces. Even the highest levels of the technological elite are quietly stepping out of the collapsing matrix. Recently, massive conglomerates like Samsung completely bypassed every global exchange on the planet. They utilized direct cash prepayments to lock up production, to lock up 100% of a primary mine's silver output for 2 straight years. They go straight to the subterranean source. They know the exchanges will inevitably fail to deliver. You must understand the alchemical limitations of this reality. 70% of all silver is merely a byproduct of copper mining. The global supply cannot expand to meet explosive artificial intelligence demand and massive data center demand. New mines require 7 to 10 years from exploration to first production. No new supply is coming before 2033, regardless of what the manipulated price signals attempt to tell you. Furthermore, silver sits firmly on the critical minerals list, yet it faces the weight of recent tariffs, creating a structural cost premium that the asleep masses have failed to account for. The institutional forces know the paper price is a temporary mirage. They are quietly covering their massive short positions. The systemic selling is finished. The control grid is mathematically and physically severing its ties to the old paradigm. The transition is already here, hidden just beneath the surface of your screen. You're witnessing the deliberate dismantling of an artificial epoch. The ultimate severing is inevitable. The physical world is taking its revenge today. Throughout the entire history of commodity markets, when a persistent systemic gap opens between a paper derivative and a tangible physical asset, the gap only ever closes in one solitary direction. Physical reality does not bow to meet the paper illusion. The paper illusion violently shatters to meet physical reality. That has never failed, not once in any century. This week rapidly accelerates that inevitable convergence. We are witnessing the physical manifestation of a new economic epoch. The geopolitical pressure is compressing into a dangerous singularity. Tomorrow brings critical jobs data at 10 in the morning. Wednesday delivers massive manufacturing metrics, and Friday drops non-farm payrolls at 8:30 in the morning. Into a market totally closed for a global holiday, silver cannot trade. By Sunday, extreme geopolitical deadlines arrive, with immense tensions boiling over in the Middle East as global powers negotiate through back channels, and the military apparatus considers deploying 10,000 additional troops. Monday, April 7th, opens with all of this kinetic energy, compressed into a single trading session. Historical compression gaps average 1.5 to 2.5 times the normal reaction. The volatility index sits ominously at 31, and the dollar index hovers at 100.15 on pure fear-driven flows. Notice day opened today with 9.9 million ounces, standing for delivery against a New York vault that has bled 30% in 60 days. The exchange halted metals trading 48 hours before notice day, exactly as they did before the last major peak run. 2 unprecedented halts during extreme delivery demand. With federal transition approaching in May and the Supreme Court tariff refund of $166 billion being processed for 330,000 businesses, we are facing a massive fiscal hole. At the current drain rate, registered silver functionally hits absolute zero by May or June. Every physical market on the planet is currently pricing silver drastically above the manipulated paper projection. The United States is $3 to $15 above. The United Kingdom is $5 to $8 above. India is 4 to 7 above. Shanghai is 8 to 10 above. Tokyo, where 126 million awake minds are watching their currency depreciate, against a 10% consumption tax, is paying $37 to $57 above. $69 is not the price of silver. $69 is the price of a dying paper contract on an exchange whose leverage has blown out to 7.5 to 1. The absolute price of actual silver, the elemental reality you can hold, ranges from $72 to $127. Nobody holding physical silver on Earth is trading it at the paper price. The gap between paper and physical is the single most critical mechanism. It closes when the paper price rises to meet the reality that physical buyers have already manifested into existence. Tokyo at 127 is not the future. It is absolute present. Your screen says 69. The physical world says otherwise. Stack accordingly, and I will see you in the next one.